Okay. Randy, can you wave? Can you hear me? We're just doing a kind of an audio check to make sure everybody can hear when we get started.
Hi, Randy. Thanks for taking care of things the other night.
I don't think he's hearing us.
I don't think so either. If you can hear me, just type a quick yes in the chat box and Sherry will let us know, or Steve gave me a thumbs up. That works as well. I know Marty was on board a little bit ago.
Yes, I'm on board.
Okay.
Lottie can hear us. Miles McGinnis can. Marty Barnhart can.
Okay.
Nick at EDA is on, or DED was on with us. Judy Johnson is on. Isaiah Graham says he can hear us.
Perfect.
So.
Okay. Sharon, if I'm not getting my chat box, you may have to also help monitor questions. So let's go ahead and get started today. I'm sure we'll have many others joining us as we progress, but I want to honor everybody's time. Thank you for joining us today. Make sure and mute your microphones. Oh, wait a minute. Now I can see the chat box. Okay.
Oh, okay.
Perfect. Thank you.
Mm-hmm.
Okay. So, well, good day once again to all of you who have already joined us. My name is Lori Ferguson, and welcome to today's online gathering. I am going to be serving as your tour guide facilitator today, and my maiden voyage at doing that. So just be kind and gracious in your comments following today, if you would, please. So we have a total of 61 registered participants today gathered from across the state to learn more about investment clubs, a very interesting topic to say the least. Of those 61 or 62 that we have, 22 are new participants. So because of their involvement and your continued involvement, the network across Nebraska continues to grow. So let's just look at some numbers briefly. Okay, we've had to date 7 housing-focused webinars, 131 individual registered participants. So that's a great number from the very beginning. We've had 74 communities represented, and by my last count of communities across the state, I think that represents over 10% of all Nebraska communities. 62 are registered for today, and 21 or 22 first-time registrants. So excited to hear about this topic, no doubt. So the agenda for today, shortly we'll be starting off with Cliff Mesner of Mesner Development. He is our speaker today, as well as Terry DeGroff, who is the lead person for the Burwell Investment Club. So both of them will be speaking about investment clubs. And once they are finished, then we'll open it up for questions to our speakers, and we'll give you more instructions about that as we go. And then we'll finally wrap up with a group discussion and some final thoughts about the day. So with that, at this point, I'm going to turn it over to Sharon Heffley.
All right, good afternoon. Thank you all for joining us, and welcome to the August edition of the HomeNE 2018 webinar series. I'm Sharon Heffley, and I am the Executive Director of the South Central Economic Development District. A little background, HomeNE is a learning network geared toward housing in rural communities, which means all across Nebraska. It provides face-to-face and online opportunities to foster interaction, engagement, and skill building for local leaders and conveners. Modeled after a similar program in South Dakota, and we have Mike Knudsen from that program in South Dakota on with us today, so that's exciting. HomeNE was established in 2017 and consists of monthly webinars and 2 gatherings a year. If you're on the computer, you can see the map of where participants have called in or have joined us from. South Central Economic Development District, or SCED as we tend to call ourselves, acts as the lead agent, and each HomeNE event is intended to provide experiential learning, which means you will be empowered after participating to immediately apply what you learn. Today, we'll be hearing about investment clubs, a local tool for housing solutions, from two different gentlemen with firsthand experience. So again, welcome to today's call. It is with great pleasure that I get to introduce our first speaker, Cliff Mesner. A little bit about Cliff for those of you that might not know him. Cliff and his wife Kathy are attorneys and real estate developers from Central City, Nebraska, and they are the owners of Mesner Development Company, Mesner Law Office, and Mesner Solar Development Company. So they don't have hobbies. But Cliff served as the Economic Development Director and the City Attorney for the City of Central City for more than 25 years, and he helped organize a number of local investment clubs and home builder groups across the state. They have developed low-income tax credit housing projects and workforce housing projects in Nebraska and Kansas for over 25 years. Many of these in smaller communities, providing much-needed new housing stock and understand the importance of housing to the growth of small communities. Cliff not only helped organize the Central City investment clubs, he has also prepared and made available all the paperwork necessary for other communities to form investment clubs. So, welcome, Cliff.
Thank you, Sharon. What we want to talk about today is the investment club or a home builders group. Some communities have done both. Some communities use one company to do both events. And what happened with us here in Central City was that, do I have control of it yet, or? Okay. What was happening in Central City was that we had developed sources of money for charitable purposes. We had a county foundation that's very well monetized. We had money put together for tax increment financing and city sales tax through the LB 840 program. But what we lacked was venture capital. Capital that private industry could bring to the table to do things that were harder to get through a community process, a city process, the things that didn't qualify for charitable. So that was the issue that we faced. And we knew that venture capital was harder to raise if you have to raise it in a hurry. If you have to go raise money in a hurry, somebody has to act as the fundraiser. It requires bigger investors to get it put together in a hurry. And it's often a hardship for the investors if you need to raise it in a hurry. You're never asked at the right time. So we were trying to figure out a different solution to that. And what we did, Kathy and I went through the phone book one night and picked out 63 names and sent out letters and said, let's get together and talk about putting together a way to create venture capital in the city. 23 people showed up that night, and we talked about it for a while, and at the end of the night, what they said was, well, let's all just throw in $100 every month and see what happens. Sorry, I'm having trouble going forward here one at a time. I know $100 a month doesn't sound like much, but it really has, it's really made a difference. We've actually put together more than $750,000 that way through the years. And that has been the key to a lot of things that we wanted to do. The goals that serves is that it makes cash available when it's needed, and it spreads the risk. My screen's not responding here. Sherry, do you want to just take control of it? There we go. Goals that are served by putting the investment club together and having everybody make a monthly contribution is, first of all, it makes the cash available when you need it. Secondly, it spreads the risk. No one was being asked to do something that was beyond what they could do comfortably. And a third thing that came out of it that I really hadn't anticipated was that it became really educational for the membership, because everybody in the club was expected to study each proposal that came in front of us, and they learned a lot about running their own business by looking at the way other businesses were run. Our mission states that it is the intent of the club to make investments in the community, which will be both beneficial to the membership and to the community as a whole. And we wanted to keep this as a for-profit business because we thought that that would keep people in the club longer, and it kind of changed the perspective on how the thing would be approached. As I said, we've always done regular contributions of $100 a month. Over all the years we've had it, we've never changed that $100. That's not a very big number anymore. But frankly, we're always sitting on cash. We don't need more cash. We need more things to spend our money on. Some of the communities have done a minimum and maximum. One community said you had to do a minimum of 50, but they allowed some people to do up to 500. And even though that made things uneven in the community was very comfortable with that. Other communities have started with a larger sum up front. Was dealing with a community last week that asked the initial investors to each put in $10,000 because they wanted to have a group that could move forward and do a project right away. Governance of the club, we've done them as LLCs managed by the members. And that's an important distinction for securities laws, because if you are putting money in, expecting a return on investment, and turning it over to a corporate board and a corporate president, then that becomes a security. But the banking department takes a completely different perspective on it when you're always involved in the decision-making process. Another item is don't advertise publicly for new members, because that is treated as trying to trade securities. You can apparently send a letter out to every person in town. We had one community that did that, but don't advertise, don't put it in the paper, don't make it a public offering. When we have something come in front of the club, we appoint a committee to make reports on the recommended investment, and then the whole body votes on that investment. In Central City, we allow new members to start without catching up. Our original thought was that we wanted everyone to be in an equal position. And so if you started the second year, you were supposed to put $1,200 in. Well, that quickly got away from us. Pretty soon we were finding we had new people come to the community, and we were asking them to put $7,000 or $10,000 down to start the investment into the investment club. That wasn't what we were after. We really wanted everybody participating, so we just allow people to come in whenever they can, even though that is creates members with unequal equity. We only allow our club members to retire at an annual meeting, so we don't want people going in and out all the time. You're supposed to give us 4 weeks notice if you want to leave the club. We do have people that retire. We had, I think, 2 people retire this year, and we had 3 or 4 new people that were starting up. So that's kind of part of the process. Frankly, from my perspective, that works, because you're trying to bring the new people in the community into the club whenever you can. We just have our accountant appraise the value for retiring members. Other communities have used other processes, but that's what's worked the best for us. We make distributions of 50% of our net taxable income every year, so that no one has phantom income without a source to pay for the tax. That can be changed by majority vote of the members. I think we've been around for about 25 years now. We've only made distributions twice. The rest of the time, everybody's attitude is just let it ride, let's see what happens, which is helpful because it means there's always more cash that's there. project examples. We've done buildings for lease with options to purchase. We've done this for the dry cleaners, the farm store come to mind. Active businesses, we were the lead investor on a motel. We were one of the investors on a manufacturing facility here. We were the final investor on our assisted living facility. We've made corporate loans. We've made loans to businesses. We've done all kinds of things with it. But today we want to talk about housing. And I've run through all that pretty fast, but I think it's important to get to the topic, which is housing. Some communities have investment clubs that invest directly in housing. Most of those communities are building housing that is being built for sale. You'll hear from Terry here in a little while about Burwell, who's actually built housing that is for lease and now for sale. Some communities, including Central City, have their investment clubs invest in a separate LLC that invests in housing. And what we did here was we created Central City Home Builders as a separate club. The Central City Home Builders Group was actually started by the bankers in town were the ones who came forward and were pursuing the idea. And what they did was they wanted to put some money together to build spec housing in Central City. And their goal really wasn't to try and make money as much as it was they wanted to hold their money together, and they wanted to help with housing issues for residents and employers because we had a housing shortage in the city like all of your communities do, and they wanted to help build the tax base. So what they did was they gathered $170,000 from local investors, and Central City Investment Club was the lead investor. We put in $50,000, which was the largest investment. But all the banks invested also, and local businesses invested. We had a realtor, a home builder, employers in town that were looking for housing for their employees, all invested. And they started building homes one at a time. And I've got some pictures here of homes that they built through the years. They built their first home. They were trying to build it for $170,000. They didn't get that done. They ended up building it for $184,000. And they were coming to us to explain to us that they had spent more money on it than necessary or than that they'd hoped to, and that we would probably lose some money, but we shouldn't give up. And while they were trying to explain that to us, the guy across the street came over and bought the house for $184,000, and they ended up making $300 on their first attempt. So they turned around and decided to build another house and sold that one for $190,000, and pricing just kept moving up as they were doing it. The program has been very successful for us. They've been making an average of about $5,600 on every home that they built. But what happened was they got to the point where they were tired of building them one at a time. They thought they could maybe do better if they were building two at a time. So they decided to expand the program. The Home Builders Group went back to the investment club and asked them if the investment club would loan them enough money to build a second home at the same time they were building their own. And the investment club, it was always sitting on $250,000 cash, so it was a pretty easy decision. We said, yeah, sure, let's go build a second one. Just build it. You guys do the work, and we'll just split the profit at the end. What they started doing at that point was building two homes at a time. They built 14 homes now. That number might actually be up to 16 now. They've added, on the first 14 homes, they added $3.2 million to the tax base. They're collecting about $45,000 a year in local taxes. More importantly, they have homes that are available to new employees moving to town. People have been able to move up. They've helped establish a baseline for appraisals, and that's been a big factor, bigger than a lot of communities realize. As Kathy and I try to do housing in small towns, a lot of times we can't get an appraisal because there have been no comp sales. And it makes it very, very difficult. What the investment club has done here is by building these out one at a time and constantly raising the price. They've taken homes and the baseline has moved from 180,000 to closer to 260,000 in what the value of those homes are. It's also helped because it's helped develop the building industry here, and it's kept our building industry kind of alive in the community. A lot of communities don't have local builders that are capable of building homes as they go that match up with workforce. We have that here in part because the home builders have kept those people going. And we build one expensive home and one less expensive home each time, so we're trying to hit two different markets. The city has started out by opening up a small subdivision, which was, I think, filled in 2 years. So then they turned around and built a second 48-lot subdivision. And we've been fortunate here. Chris Anderson and Miles McGinnis both have a passion and flair for housing, so they were kind of pushing those things along. But one of the things that helped have the courage to go ahead and do a 48-lot subdivision is that it's easier to take the risk on that subdivision when you know that the investment club / home builders will be building homes constantly. So there were always 2 homes under construction. And that makes it easier because you know that subdivision isn't going to sit forever waiting for somebody to go in and build. And a very big part of this is that activity breeds activities. As builders saw the success the investment club and the home builders were having, they started building spec homes. And there have actually been, at this point, more homes built by others than have been built by the investment club and the home builders over the last 5 or 6 years. And it's because somebody started that process and proved that concept would work. We've created a number of clubs across the state, and as I think Sharon indicated, we have forms available for formation of an investment club. A number of the clubs that we have worked with have gone out and built spec housing. We'll hear shortly here from Terry DeGroff in Burwell, and Burwell has had the courage to go out and build an apartment building, which I applaud them for, because I think they've proven another concept that will work there. So that's my time. I hit it pretty close. And I'll pass this back to Lori or Sharon or whoever's taking over.
Yes, that's Sharon. Sharon, we need you to unmute.
Oh.
There you go. Okay.
Sorry, I unmuted and started talking, and then when you said that, I hit it, and it's just slow for whatever reason. So my apologies. Okay. Thank you, Cliff. That is great information, and I really appreciate your taking the time to share it with us today. Before we take any questions, we are going to hear from Terry DeGroff. He's the president of the Burwell Investment Club, LLC. Terry is a graduate of the Colorado State University with a doctorate in veterinary medicine. He practiced veterinary medicine in Burwell from 1976 to 1994. And then he switched gears and became a ranch management consultant from 94 to 2015. And now he's retired, but if you think that means he's slowing down, believe me, every time I've talked to him, he's been in a different state, I think. So that's exciting. And I'm so glad that these business owners will retire and yet invest back in their own community, their time and their talents, because he is currently the president of the Burwell Investment Club, and he has been the manager since 2004. So, Terry, talk to us about Burwell's Investment Club and the 8th Avenue Apartments, please.
Thank you, Sharon. First of all, can you hear me? Am I unmuted?
You are, Terry. We can hear you.
Very good. Thank you. Thank you. I've been asked to give some brief comments about the apartment building that we've created here in Burwell. A lot of things about our investment club are similar to what Cliff described. The Burwell Investment Club was formed in 1996 with 8 founding members, mostly in response to a threat of losing the local USDA Farm Service Agency office due to inadequate space in the building they were renting. I was not one of those founding members. I joined the group in 2004. The membership has since grown to almost 50 members. The primary goal of the company is stated to improve the commercial real estate properties in the community. We strive to preserve each member's contributed capital with a modest income expectation. No dividends are paid. Most projects have involved buying a rundown vacant property, demolishing the existing building, and replacing with a new structure that fits some perceived need in the community. We then rent the new building for a period of time and later sell it at depreciated book value. Most of our properties, we have owned and operated them or rented them for about 5 years before selling them. We purchased a vacant property in the downtown area known as the Burwell Butter Factory in the December of 2013. We worked with the city of Burwell to acquire a TIF grant to offset the cost of buying the property and demolishing the existing building to get to a vacant lot suitable to build on. We were also required to purchase the TIF bond the city used to finance the grant. The membership decided to build an apartment building on this site to help meet the housing needs in the community. We contracted with a design build company out of Norfolk. A firm in Grand Island helped us develop a 10-year pro forma profit and loss, cash flow, and balance sheet. This allowed us to determine necessary rental rates and gave us the confidence to proceed. We settled on a monthly rental rate that would make the total cost to a tenant of about $1 per square foot of living area. Construction began in the spring of 2014, and the building was completed in December of 2014. The building has 4 3-bedroom units and 4 2-bedroom units, all on ground level. The 3-bedroom units are 1,350 square foot with 2 full bathrooms. The 2-bedroom units are 980 square foot with 1 full bathroom. All appliances are included, as well as washer and dryer. Total cost came in at about $100 per square foot. The first tenant moved in January of 2015. Thus far, we have exceeded the budgeted 80% occupancy rate. Actual cash income has been more than budgeted, and cash expenses have been less than budgeted. Because of that, we have made several prepayments on our term note. Return on assets on a cash-to-cash basis has been in the 6 to 7% range. The property is now listed for sale.
Okay, thank you, Terry. That was great information as well. At this point, we have put up Terry's contact information there for you to see. We're also going to open the floor up for questions. Both of our presenters today gave us valuable and great information. I just sent out in the chat box, are you hearing some new things today, to kind of get you to start thinking about our question time here with both Cliff and Terry. So if you want to ask a question of either individual, you can do that one of 2 ways. You can open up your microphone, and if you do that, state your name, where you're calling from, and then pose your question for Cliff or Terry or either one. You're also welcome to use the chat box, and we will monitor that, and we can ask those questions for you as well. Cliff and Terry, we already had a question here just a few moments ago from Andrew, and I believe he's calling from joining us from Broken Bow. The question is, and it's got a couple different components. So first of all, how would the investment club treat a conflict of interest? If there is an active builder or construction base in the community, how do they interact with the investment club or home builders? Are they members, partners, or etc.? So Cliff, do you want to take that one? I can read it again for you if you would like.
I've got it here. The conflict of interest, normally those things are noticed, and people just don't vote on something if there is a conflict of interest. But honestly, with our investment club, we really don't have that issue very much because we either all agree to move forward or we don't. I think in all the years we've done this, we've only had one time that we've done a project with a split vote. And by a split vote, I mean out of 25 people in the room, one of them said, no, I think this is a bad idea. Other than that, it's either been a unanimously we're going to do it or unanimously we're not going to do it. Our club has just felt that if the project was 60-40, we shouldn't be doing it because we shouldn't go into anything that doesn't have full support of the whole club. So consequently, the conflicts of interest don't show up very much there. On the home builder side, one of our construction builders is in fact a member of the home builders group. But he has generally been hired to manage the projects for a percentage as opposed to actually building the projects. And there's probably the greater conflict we've had is we've had more than one realtor in the home builders group. And I was in a meeting a while back where they walked in and they had a house available and two realtors walked in both with offers for the asking price. So then what do? You've got two realtors that are both members of the club. They both have buyers and both of prices are the same. And that was a problem, and there was a certain amount of angst over that. And the people within the club were kind of struggling with it. And it was actually the buyers who sorted it out because one of the buyers came into the conversation and said, well, why don't you sell him this house and build me one like it across the street? And that's what they did. But for the most part, those things have worked themselves out. People just don't vote on it if there is a conflict. I was doing the economic development work, and there was one time where I probably was in a conflict dealing with that, and I actually left the club. And I was out of the club, wasn't in the room, wasn't a member of the club. A year later, Kathy and I went back and joined the club and put our money back in and got ourselves caught up as though we'd never left. But we just pulled ourselves out of the room for that period of time until those decisions were made.
Okay, thank you, Cliff. What are some other questions that some of you might have? We'll go ahead and unmute all of your mics if you'd like to ask questions of Cliff or Terry. Sherry can do that for us. Cliff, can you, and maybe I missed it, what were the average square foot of the homes that you were building?
It's varied. The bigger homes were 1,500 square feet with a full basement that was unfinished. Out in the new subdivision, most of those homes have a walkout basement. The smaller home, Miles may know this better than me, were I think around 1,300 square feet, but we're on less desirable lots.
Okay.
That's about right, but they also had a basement.
Yes, they also had basements in them. We like the unfinished basements because families can expand. They don't have to pay a big price for the house up front, but as the kids get older and they want more room for the family, they can finish out the basement, and that allows them to grow into the house and grow with the house as opposed to having to go someplace else.
Okay. Okay. Thank you. Does anybody, I hear some background. Does somebody have a question for Cliff or Terry?
This is Steve Brewster. It sounds like you both, acting as president, have a lot of experience. What sort of experience do you recommend for new clubs in terms of the officers?
You know, I think each community knows themselves. They know who it is that's going to be active and move things. It's real easy to put money together that's just sitting in the bank, and that doesn't do you any good. I think when Terry got involved with Burwell, that he felt that the money was kind of sitting there, and I think he was one of them, went in and got aggressive and started looking for projects and making things happen. Make sure you've got an accountant in the club because it just helps. They bring a skill set to it that are really good. Of course, Kathy and I are both attorneys, so we think, you have to have attorneys around, but there are people who would argue just the opposite, I'm sure. You want business people. You want people that understand business and are willing to look at something that comes into the community, make a judgment whether or not that can be successful and whether it adds to the community. You don't want to spend your money bringing in bad businesses. You want to spend your money on things that are going to be successful. We probably turn down more stuff than we accept. And when businesses come to us, we make them go through the steps. We make sure that they have everything in line that they need, that they have not just what we're doing, but they have their other financing and a business plan that makes sense. And you need the people that can help them work through that.
This is Terry. I might make a couple of comments in regard to your question. Cliff's already mentioned, I think the primary attribute that a managing member needs to have is you need to have somebody that has some time and want to act as a champion for the club, willing to get up in the morning and be thinking about the issues of the club. And in our experience, we've not been able to find that with the majority of the membership. The difference in our club is we have an annual meeting. The membership actually votes on a managing board of 5 persons. I'm one of those 5 people. That board of 5 people elects officers and actually conducts the business of the club. And we don't expect the membership, and actually, if we expected it, we probably wouldn't get it for all the members to participate actively. They're passive investors. We may be violating some legal principles, as Cliff's outlined earlier, and I guess I wasn't aware of that. And but it's been working for us. That's the way we function.
Well, that would be my follow-up question. It sounds like the management or the managing board is really actively engaged, and I'm wondering where that line is between not being actively engaged and being in the crosshairs of the securities or banking industry.
I'm going to have to plead ignorance to that question.
Well, I am too. That's why I'm asking.
I've gone through this with the banking department on several occasions because I wanted to make sure as an attorney that I wasn't stepping outside the line. And they've been quite comfortable with what we're doing as long as we're not publicly advertising, come join the club and make money. The LLC gives everyone the opportunity to participate. If they choose not to participate, I think that's okay, but the legal structure allows them to participate. We leave ours up so it is a vote by the members. and every investment that's made has to go through a vote of the members. Now, that doesn't mean all the members vote, and some of them hand it off to on a proxy. Probably the accountant that's in the room has enough proxies to pass every project, but he never does that without calling each of his proxies and saying, "This thing's coming up. What do you want me to do with it?" So he's saving them coming into the room, but he's not leaving them out of the process. He continues to talk to them, and technically they all have the right to come in the room and cast their vote. I think that's the important distinction, Steve.
Okay. Okay.
One of the things we might do that might help us is at our annual meeting, a majority of the membership by ownership has to approve the past year's activities of the managing board.
Okay. Is there anything else to add there, Cliff or Terry? Okay. I have a question here. Cliff, on your slides, you mentioned the increase in valuation as well as the tax base. What would you or Terry or anybody, maybe Miles even might have some feedback, what would you say were the other additional economic benefits to having an investment club in the community?
Well, from the investment club perspective, the housing's only one piece of what we've done. We wouldn't have a new motel in Central City if we didn't have the investment club. The investment club made the final investment on the assisted living facility, which has been a great addition. We would have lost our farm store if it had not been for the investment club. The investment club participated in bringing the hardware store to town. So there have been lots of things that we've been involved with, trying to push things over the hump and get projects finished. In some cases, get projects started. Those have been the bigger items, frankly. It's hard to do a lot of the work that we do without having a motel in town. Your community can't grow without new housing. Those things all add up and all help.
Okay.
I might give a couple of examples in Burwell that again, I think that increasing the valuation of the community is a big deal. The other thing is a lot of businesses, startup businesses, don't have the ability to capitalize real estate. So again, providing rental properties. The very first building we built was an office building, and it took us about 6 months to build the building, and actually it was fully rented the day that it was completed, and so that worked out quite well. The capstone tenant was a bank that had just moved to town. This is a one-bank town. For 20 years, a lot of the surveys indicated there was an interest in having more than one bank. So that brought a second bank to the community. The next project we did, probably not that, the third project we did was we made an industrial park just outside of the city limits and bought a 40-acre cornfield, converted it into lots. We have sold all those lots. They've all been developed with commercial buildings, and one of those was another bank that built a brand new building on one of the lots, and then there's 5 other successful businesses that have also developed buildings on that property. So again, I think it's providing the building or the lots. In the case of the industrial park, those are 3.5-acre lots, which are difficult to find sometimes that are suitable for an industrial activity.
Okay, thank you. As Cliff said, activity breeds activity, and I think I'm hearing that from both of you. So does anybody have any questions for either Cliff or Terry? Okay, let's kind of move on then to our group discussion. What is one item that has jumped out at you today as you've listened to our presenters? What's a new way of thinking or just something that has jumped out at you today? Feel free to open your mics or chat with us.
Hey, Lori, it's Miles. I was muted before. I had a question for Terry on, maybe I missed it. Why did the town desire an apartment complex, or what encouraged you to do a apartment complex versus a house or houses?
Great question. Terry?
Again, I would say that one of our big drivers on selecting a project is to take a piece of real estate or a building that's vacant, run down, very minimal valuation on it. So that's what is the first criteria that we look at. This was down in the downtown area, an abandoned building that was occupying 6 lots, half of a city block. So with the notion that we were going to tackle that building, we had to look for something that was suitable on that kind of a site. Since it was downtown, we came up with the idea that apartment. One of the members suggested an apartment because of housing. Probably a secondary consideration would be is that it's pretty obvious that the cost per square foot, and I brought that number up, is less in an apartment than it is in an individual home. So that's one of the considerations is too. We thought we could build. In fact, these apartments are larger than normal apartments by no means. By all measures, we think they're larger than most apartments. People are surprised when they tour them, but we did it for a lot less cost per square foot than we could have with a home.
So it was mainly investment club driven and not necessarily the community want or need for an apartment complex.
Correct. I would say that's correct. Investment club acted without, we don't have projects brought to us. We actually identify them ourselves. The membership does.
Okay, thank you.
Great question. Thank you, Miles and Terry. So I put in the chat box a question once again. What is one item that has jumped out at you today? Don't be shy. We'd love to hear your voices. We're all learners and teachers in the room today. So what's jumping out at you?
This is Sharon Heffley, and for me, I just am hearing about, taking the dilapidated properties, and I'm thinking about Holdridge, and we have 3 houses that have had fires within about a 1-block area. And what an investment club could do to just flip that neighborhood in pretty short order, as opposed to waiting for somebody to come in and just amazing that. And in the last 2 weeks, I've heard of more people looking for office space or retail space. And again, I'm thinking, wow, what a great opportunity if the locals would rise up and take that leadership and do it and have their own money to do it. So I can see in more than just Holdridge, but those are the first ones that come to mind because I'm driving by a cleared lot and then this burned up house every morning on my way to work.
Thank you, Sharon. Yes, that would be a great opportunity. So, and maybe some of you have those same situations in your communities. If so,
one of the things, this is Terry again. One of the things that we've looked at over the years is, I'm not sure the right words for it, but kind of like a mini mall or a mini mart, just a long, narrow building with maybe multiple front doors and maybe even overhead door in the back so that could accommodate small businesses, plumber, electrician, those kinds of businesses. We haven't built one of those, but we've talked about it a lot. Another thing I've observed over the years is the city of Grand Island we have a lot of homes in the town, like a lot of small towns do, 2-bedroom homes that are 60, 70, 80 years old, 800 square foot, 1 bathroom, and those need to be purchased. A lot of them need to be demoed, and then a new house built back on. But number one, you got to buy it, and then you got to demo it at a cost. In Grand Island, almost monthly in the city council meetings, I see where they have TIF approvals for that activity to be able to TIF the cost of buying an existing home that somebody wants to sell, demoing it, and getting down to a vacant lot.
Okay, thank you, Terry. I think Andrew has a question.
Yeah, I'll chime in here. I feel like I've heard this talk a couple times, and I think we make it sound so simple, but what is the primary driver to communities not being able to implement investment clubs for housing or for any other sort of business activity? Cliff, Terry, from what you've seen, what prevents people from getting involved? Is it fear of the unknown? Cliff, I would consider you a subject matter expert. So, does that put people at ease? Are there still, some hesitancies to wanting to put together something like this?
You know, in my experience, it's always come down to one person that just goes in and pushes the idea. We've started a couple dozen clubs across the state, and some of them have been in larger communities like York and Seward, but some of them have been in very small towns. I was asked to come up and speak to Lindsay and Lee, Nebraska. When I went up to Lindsay, they told me that they thought they could get 40 people to show up and talk about investment clubs, and I kind of laughed at them. I said, "There's only 143 people in your town. You're not going to get 40 people there." And I got there. There were 72 people in the room, and 40 of them joined. And it was all because there was one guy who said, "I'm going to call them up. I'm going to get them there." I think those people are out there in every community. Somebody just needs to pick it up and float the idea and send letters out and say, "Let's get together and talk about this." And then, you know, we make just a short presentation to them. And most communities like the idea, pick it up. They think, well, what do we have to lose? And like in our case here, has it been a great investment? Probably not. We'd have probably all been better off if we had bought Amazon or Apple or Berkshire Hathaway. But none of those groups are going to build motels in our town. And we have money that we're putting away every month, and it's still there. If Kathy and I want to leave the club right now, they'd write us a $45,000 check. And when you kind of go through that history, people start looking at it and going, okay, well, this isn't, nobody's asking us to give up a lot to do this. And people will self-choose after that. Some of them will turn into passive investors who don't want to show up at any of the meetings, don't want to make any decisions. And other people will like the idea and will want to be more active and will pursue it. But I think it all comes down to just having one or two people in town that says, hey, we're going to organize a meeting and see what happens.
So when you're beating the streets for people, that's recruiting, not advertising?
Right.
That's correct. And what we did here was we just literally went through the phone book and sent out 63 letters. And we didn't have a problem with that. I think the community of Henderson sent out a letter to about everybody in town. But we actually did we've done two investment clubs. The first one we did was a subchapter S corporation. And that created certain griefs for us. When that group sold the motel, we terminated that club and formed a new club. And when they formed a new club, one of the guys and he didn't talk to the club about doing it or talk to any of us, but he just went over and decided, well, I'll push this thing along. He put an ad in the newspaper and said, hey, the investment club's meeting, you should all show up here at 7:00 on Tuesday night. And I got a call from the banking department saying, no, that's not the way you do it. And that was the second time I went through it with them, and they said, no, this is fine. You can send out letters. That's not a problem. But we don't want a public advertisement, so don't put it in the newspaper.
Okay.
And they just said, don't do it that way anymore. There was no penalty to be paid. They just said, don't do it that way anymore. And of course, we haven't.
Okay, thank you, Cliff. We've
Do you
had
have any provision for if everybody wanted to cash out at the same time and the money wasn't there because it was in a project before it had been sold? Do you have a prorated payout or something like that?
We really don't. The one investment that's created grief for us is the assisted living facility. When we were invested in the motel, if somebody wanted out, we just gave them a percentage of the motel stock. And that was easy, so they got a prorated share. The problem we've had is with the assisted living facility because it didn't cash flow when we started. So you had an investment out there that was requiring cash. And after a few years, when I got full, it was just the opposite. It was providing a lot of cash coming back. So, so that's been a difficult one to assess, and they don't want us to give them a smaller percentage of the assisted living facility. So that's been the one that's caused grief. But we value things based on the buy-sell from the assisted living facility. So if everybody wanted out, what we would end up doing is, would sell the house, sell back our interest, the investment there, cash it all out, and everybody would leave.
Okay. Thank you, Cliff. Pardon me, Terry. Did you have something to say?
The direct answer to his question about exit policy, our operating agreement was amended in 2004. Anybody that wants to exit, the operating agreement spells that they will be paid out on a monthly rate over 10 years at 1% over prime. But if cash is available, they may be cashed out. We've had several small investors have been cashed out, but we're prepared for a run on the bank. If we have all of our capital invested, we can't cash out everybody.
Okay, thank you, Terry. I just want to acknowledge a couple people who've dropped in some comments in the chat box here. Mike Knutson, who's actually joining us from South Dakota today, said that a takeaway or an aha for him is that this creates the capital in advance of when you need it, because it does take time to raise money. And he says thanks for the comments. And then Nick Drapinski, who's joining us from Lincoln today, I believe, asks a couple questions as we wrap up. I want to get those in front of the group. When a club is just starting, how long does it take to raise enough capital to invest in a project, is his first question.
Of course, it depends on the project. We actually had enough capital to do our first project within a year, because what we were buying was a $25,000 building. And that was a situation where the bank came to us and said, this group wants to start a small business. I can loan them the money for the business, but if I have to loan them money on the building, I'll have to do an SBA loan, and it just isn't worth it. Can you guys help us out? We said, sure, we'll buy the building, we'll lease it to them on a triple net lease, and they can buy it at any time during the first 5 years. And 2 years later, they came back to us and said, the business has gone well, the bank will loan us some money, we want to buy the building, and they bought the building, and we moved on. If you're doing a larger project, it takes a while to build it up. You should talk about that when you go into it, and people should be patient. Do not let them get into a position of, well, we have money, we have to do something. If there's not a good project to do, your money in the bank is a good thing, because it means it's available when a good project comes along. Just look at Berkshire Hathaway and see how much cash Warren Buffett is sitting on right now, waiting for the right thing to come along. You need to be patient with it, but you also need to do something, or your club will get stale.
Okay, and then Nick had a follow-up. He was curious about the average rate of return on an individual project, if you would feel comfortable talking about that.
When I look at the projects that we've done and the money that's been invested, we're probably making 5% or less on the stuff that we've done over the years. The motel, for example, we had $130,000 in it. We sold it 13 years later and took $210,000 out. That's a little less than a 5% return. But the motel brings $500,000 a year of outside money into Central City every year. And the group that was looking at that originally was going to donate money to try and get a motel started. So that group looked at it and thought, boy, this is a good thing. Instead of having to donate money, we invest money and get 5% back. That's a lot better deal. But it's not, these are not get rich schemes. And I often tell the investors, you should fully fund your IRAs or your simples or whatever you have before you do the investment club. Those are more important investments for you. But most of us have $100 left over at the end of the month that we can put into these things without really noticing them.
Okay. Thank you, Cliff. Let's just go ahead and wrap up here today. Great conversation. I appreciate all of your involvement and participation. Just a general comment that was asked. The PowerPoint will be available to participants, and then the recording will also be on our YouTube channel. If you go to SCED's website, that address will be available to you. Thank you for joining. Next month, we will have a great conversation as well. John Madsen, who joined us today, I don't know if he is still on, but he will be speaking about the power of perseverance, the story of Stewart, Nebraska. If you haven't been to Stewart or heard that story, you're going to want to join us on the third Thursday in September at 2 o'clock, September 20th. So you can see our SCED website there for webinar information. So with that, Sharon, do you have anything else? And maybe she needed to leave. I know she maybe had something going on. So.
Yeah. No, I'm
there you
good.
are.
Thank you all for joining us. Really, really appreciate it. And man, Cliff and Terry, you guys have provided some really fantastic information. And I don't know, I didn't think I needed another thing to do, but Cliff, you've kind of got me thinking I need to be doing some moving and shaking in my hometown, more than just all the communities that we work in. So thank you all. And I am really excited for next month. I have been to Stewart. I have been working with John. He's a lot of the reason that we have this HomeNE Learning Network. So you will want to hear from him next month.
And I see he's still here. And so, John, we're looking forward to your participation next month. So
Well, I'm looking forward to it also. I appreciate the opportunity, and I might have somebody else join me so we can cover all the bases of things we've been doing here over the years. Look forward to talking to everybody next month.
well, perfect. Thank you, everybody, for allowing the HomeNE to take an hour of your time and for helping us to grow this network. Pass the word, and if there's nothing else, I'd just like to say good day to all of you, and thanks for joining us. Have a great rest of your Thursday afternoon.
Thank you.
Thanks so much.
Thank you. Okay.
Are you there? Yeah,
I'm here.
let me stop the recording really quick.
Okay.
Stop recording.
And if Sharon's available and wants to